What's up, y'all? We're live. Let me close and reopen the platform. It's something I always like to do to make sure the connection is good. It's still in real time, so we're good. Alright, let's see here. Alright, what I'm doing now is I'm going through my watch list of stocks. You see here I have 50 stocks. And this is my scans is scanning these 50 stocks, looking for potential indications of buy or sell signal. So what I typically do is I'll go through each one, looking at the charts and see if I have a potential trade. So this is Apple, nothing there. Remember the red dots and red checks indicate a sell signal. Today emphasis will be put on the daily and the 2-day, because the 2-day closes this. Let me show you what I'm talking about. Bear with me. Okay. This is a 1-day chart and this is a 2-day chart. So this is Apple. I have no signals here. Remember, the yellow indicates a sell. The blue indicates a buy. So today, this is today's bar for the daily, and this is today's bar for the 2-day. The last day that the 2-day closed on was on Thursday. So today's bar on this chart will close today. So I'm focused on the 1-day and the 2-day. The weekly was looked at yesterday. And this is my spreadsheet that I created. I have my list of stocks here. These ones on the top. The ones on the top are the ones that I really focus on, because they have a lot of people who trade them, so the volume is high. And then this is what I call my second stream, what I focus on. Here at the bottom is these stocks that have like a sort of niche to them right now, like GameStop, BlackBerry, not necessarily Twitter, but I have these in here too. So look at those. The account, this is my 5% risk, and whatever contract I go to, I'll put my risk here, and based on the profit or loss, I'll put it here. This is just something to allow me to look at it in a different way. So let's go back. Alright, Apple. So what I do is like I said, I'll go through the stocks. See Apple, ABNB, which was a sell here. It's down. Let's see. It's a sell on Friday. Got AMD. Now you see both of these are indicating a sell. So we'll come back to that. These are the contracts. These are the calls. And these are the puts. You can see them, they're constantly, changing. because they're being actively traded. This is real-time action. So we're looking at Amazon. Amazon is indicating a sell. Amazon is at 32.25. Look, this is the 31.05 put. So if I wanted to bet that Amazon was going to 31.05, it cost me $400 to make that bet. This is why I tell you that Amazon contracts are expensive. They're gonna cost you some cash to go into. BlackBerry, Baidu. So you can't see, but on my other screen, I'm actually, as I'm going through and I'm looking at charts as well. Beyond Meat, CMG. These stocks is all given sell signals. CMG price $13.95. You see it changed. So I usually wait closer to the close to see if it's still the same. And then I'll execute. Dash, nothing. Disney. And when I say volume, this is the volume of contracts. You see this? This is in the thousands. So I typically focus on the stocks that have that type of volume, because it's easy to get in and out. DraftKings. Remember, Facebook on the weekly gave a possible sell signal. And remember, I told you that the last day of trading last week, it will probably have follow through on the upside. So I would say 7 times out of 10, it's best to wait to see what it does on Monday to get into the position. And as you see here, if you would have gotten in on Friday or Thursday, which was the last day of trading, it would have went against you. This is just stuff that I've learned throughout the years. That look at GameStop. GameStop is quiet. Google, nothing there. Let's see, Goldman Sachs. So when I get a buy and sell signal on a chart, I would typically place a red or a green bar. If it's just a 2-day, it'll be like a orange bar for a sell on the 2-day, or one of these turquoise blue bars. So I'll put the Goldman Sachs there, green bar. Intel. Another thing also, And this price action, what you see, this is price action. This is the battle between buyers and sellers. You know, and stocks seek to take out new lows and to take out new highs. And you have a stock that's in like the mid-range of price movement. Those are the type of trades that I'll pass on. I like to catch them at extremes like this, like you see Microsoft. Okay, LA. I had a weekly buy signal in MKLA. But as you can see here, this is the Thursday's close. It went, look how below, it went below this range, taking out these, it's seeking a new low. So I would wait till these bars turn blue before going in. Nvidia. All of these stocks that's given the sell signals. PLTR. Today and the daily. Let's see, Riot. This is the stock that's tied to Bitcoin that I started working on. Riot. Cool. Shopify. Snap. SNDL. It's another one of those stocks that went crazy in the Reddit community. It's indicating a buy, but it's going back and forth. See, right now the market is in trend mode. This is what you call an uptrend, where buyers in the battle over price movement is stronger than sellers. Tesla. Look at Tesla. Tesla is at 692. The 630 strike is at $289. So I'm going to bet another one of those expensive stocks. Twitter. So I like to go through each one, and then I'll go back to the scans. And while I'm doing this, I'm still looking at the charts on my opposite screen. I have two monitors. This Goldman Sachs is giving buy signal, but let me show you what I'm talking about. It seems like it's seeking a new low. You see this here? Now, if I was getting a buy signal around this area here, you know, it would indicate a possible trade, plus the 2 days and lining up with it. So I think it has more room on the downside. So I will wait to see what it does tomorrow. None of these trades I feel comfortable with, and I'll go into detail about that. Why some trades I choose to take, and some trades I choose not to take, even though I get these types of signals. But it's an art to it. Even though I have these, all of these are my indicators. And this is what the scans are showing. Indicators saying sell or buy, or say a down signal or an up signal. But there's certain trades that I will forego until I get the lineup that I feel comfortable with, and also the price in terms of the options. Like on this Tesla trade, or Tesla signal, it's out of my price range. I'm not paying $300 to bet that Tesla's gonna go down from 691 to 630 early in the week. I just won't do that. I'll wait. There's nothing wrong with waiting. And with the Goldman Sachs, I want to wait. Even though I got this buy signal here, I still think it's seeking to take out a low. Now, somewhere ask, well, why not buy a put? I won't buy a put because then that would go against this signal here. Now remember, this very well could go up tomorrow before going lower. It could go up tomorrow. So I'm not going to go against the signal, but at the same time, based on my past analysis and experience, it seeks to take out lows and highs. Nothing is 100%, but I would say seven out of 10 times it happens. So this trade, it might seek a new low early and then reverse. Hopefully I can catch that then. We'll see. So these signals here, none of these signals I'm taking. And again, as I go on, I'll explain to you why I didn't take them. There's a certain formation that I look at in the charts that I would consider high probability, high probability signals. And I'm not getting any of that today. So what I'll do is I'll patiently wait till tomorrow and look at possible trades for tomorrow. I'll wait. And that's what's going to cause you to be a winner in this game. It's a waiting game. That was the closing bell. Happens every day at 4 o'clock during the week. So the market is closed. But let me show you something. Even after the market closes at 4, you have stocks that are still trading. The SPY, this is an exchange traded trust. I'm sorry, an exchange traded fund. It's an ETF. You'll hear that word a lot if you watch the financial news. They operate more like indexes, to be honest, where you have a lot of people buying these ETFs that are linked to different industries. The SPY is linked to the S&P 500. I know if you guys, watch the news, you'll see the Dow, the S&P 500, and you'll see the NASDAQ. Well, the SPY is linked to the S&P 500. It's the most widely traded stock in the world. Look at the volume. You see that? It's in the thousands. It closed at 406.30. And look, the 407, if you wanted to make a bet that SPY was going to hit 407 by Friday, look how many people traded so far. 29,000, almost 30,000 people traded in this contract. 44,000 in the 405 call. Even on the put side, you can look at the volume. If you wanted to bet that it was going to 400, 53,000 contracts traded today. This is the number of contracts that traded. So this is the stock that it has the most volume out of any stock that's traded, the SPY. Look at the Q. This is the QQQ. This is linked to the NASDAQ, which is primarily, it primarily represents tech stocks. But look at the volume. On the call side, 21,000, 14,000. I would say that this is the second widely traded stock. Every day, these contracts are always in the thousands. What you call is highly liquid. So, the QQQ, the IWM, this is linked to the Russell 2000 index. These stocks trade to 415. All of the other stocks close at 4, like Apple. Even Apple's volume was high today. Look at that. The 125 call, 98,000 contracts traded today on this stock. Wow. Put side, Apple's volume was extremely high. So Apple, look at Amazon. Remember I told you how expensive these contracts are. Look at that. Closed at $32.25. 3,300. If you wanted to bet that it was going to go to $75 up, I'd give a $75 up move. You got to put up $800 to bet that. But it still has volume in the thousands. So there's some big players out there who buy and sell Amazon options. Look on the put side, $32.25. If you wanted to bet that it was going to $31.05, it cost you $400. So these stocks trade to 415, the SPY and the QQQ, because the options prices are influenced by the futures market. So the futures market every day closes for a brief period at 4:15, and then it reopens at 6 o'clock every day. of the week. So these options will continue to be traded all the way up to 415. The SPY, the Q, certain indexes are still trading. Now this is the cash, the S&P 500 cash index. This is closed. This closes at 4. See, the index is closed, but the options are still moving. You see that? And I actually learned, this the hard way, which that's a story for another day. But you can see how these options are still trading. There's still people making bets on how the S&P 500 is going to move tomorrow. So they're still, trading in and out of these contracts, and they do it up to 415. So even though the overall market is closed, money never sleeps. That's what they say. It's fluid. So go back to look at Facebook, the Facebook options. You see the high volume, 43,000 contracts traded on a 310 strike. Remember the strikes? These are the strikes. These are the prices where people are betting Facebook is going to go. And it closed at 308. So look at the 315. 19,000 contracts traded. 315. So if you was to buy this contract, betting that Facebook is going to go to 315 by the end of the week, by Friday, it would cost you around $200, $206. These numbers here you have to multiply by 100 because every contract represents 100 shares. So always times these numbers by 100. So this is actually $206. This is $61. This is $8, $13, 10.61. That's $1,000. And even though the puts put means that you're betting for the stock to go down. So if it's at 308, the 300 contract, if you wanted to bet that Facebook was going to go back to $300, this is the strike. This is the price. It costs you $143 to make that bet. The best thing about options, this is all that you're risking. If you buy this contract for $143, that's all you have at risk. If you have $1,000 in your account and you place this bet at $143, you only risk losing that $143. That's it. So with options, you'll know what you're risking up front. That's the best thing about options. You're only risking whatever you trade. So the key to this game is to have some type of money management rules in place. So Facebook did what I thought it'd do. It was follow through from last week, and like I said, the market's in the uptrend. I'm going to probably in a later video that I'll be doing this week, I'm going to refer you guys to some good reading material, especially on how to read charts. If you can just read a chart and look at it and tell whether or not a stock is in an uptrend or a downtrend. That's just a good thing to know and to have on your side, how to read charts. And again, like I said in the past, charts can be read in different time intervals. It's giving me a signal about my resolution. I hope you guys can see that. Let me know if you guys can see it. Okay, so tomorrow we'll do it again. I'll probably have some trades that I feel comfortable with. And when I do have these trades, I'll put it on the spreadsheet here. And the reason why I do this is because I never want to go above my 5% risk for the week. So, and my trading account, I'm willing to risk weekly $1,363, $1,300 is what I'm risking. This is 5% of what's in my account, and I'm going to spread that amongst multiple stocks. So we will see what we get tomorrow. And until then, you guys have a great one. And please let me know if the resolution, if you guys are able to see the screen, the charts, if it's clear. Please let me know. Alright guys, thanks.